earnings calls happen 4 times a year for a company. And this is a chance for the company management to engage directly with their analysts and investors and the media on financial results.
This year, actually, new accounting standards came into effect for leases. So in the past, companies do not have to show operating lease as their obligations. But now the new standard is as long as the lease is over 12 months, they have to show them as obligations on the balance sheet. So what I would expect is, holding everything else constant, I think you will see a much more leveraged corporate picture starting from Q1 of 2019.
All year long, analysts are following companies, public companies, and they've built these financial models to try to predict how they think the company is going to perform. The 20 analysts following the company, the 5 analysts following the company had a number in mind and a consensus number. Were they better, worse, or the same? All these analysts have published their numbers and said, we expect the company to hit 20 cents a share, or 26, or 30. And there's an average number that comes out, and then the company announces its number. And that's still not telling you whether that's good news or not, because a company could beat earnings by 5 cents a share, but people expect it to beat by 10 cents a share. So it's a very emotional opportunity. As we see in the stock market, emotion drives the stock market every single day.
After the bell, Facebook reported fourth quarter earnings well beyond expectations.
Facebook tells investors how many monthly active users they have. Some companies, interesting, in addition to the key financial metrics, they actually also report key non-financial metrics.
For years, Apple's been notorious for under-promising and over-delivering.
Apple always tell their investors how many phones were sold in the quarter. Again, that's their main kind of source of revenue stream.
A lot of the general thought is that earnings calls on a quarterly basis in the US are driving short-term behavior by management, that they're trying to, either through accounting gimmicks or other things, they're trying to manage for the short term because that's how that's going to drive the stock price. It's only 4 times a year that you get this kind of candid conversation with the senior management of a company on its financial performance.